What are dividend kings and why they are so good for long-term investors? And what are my top two picks out of these very short list of dividend kings? These are the questions I will answer in this video. So let's start. Hello and welcome to Investing for Generations. And as I said, I want to talk about dividend kings today, and I will give my top two picks out of this list of dividend kings, and I also want to give my weekly insight of my portfolio. So let's go. And the first question to answer is, what are dividend kings? And dividend kings are companies who have increased their dividend for 50 plus years, and this is really just a rare list of companies, and out of the S&P 500 companies, there are just 29 companies which are qualified as a dividend king. And I will scroll through this list a little bit, and there are very famous brands, of course, like Coca-Cola or 3M or even Colgate-Palmolive. But there are also some companies you may never heard about. So it makes really sense to go through these companies and just see what they do, because these companies, every company of them, are special in their way, because it's really, really rare to be a dividend king. So what are my top two picks out of this very exclusive list? My number one pick is Procter Gamble, the very famous Procter Gamble, with these very great brands that maybe everybody in the world know, and with these very long histories since 1837. So this is just, first of all, a great company with great brands and a strong market position, and therefore they are able to create free cash flows all the time. If there is a recession or not, they just earn money all the time, and with that they can pay dividends for 64 years growing, and with a dividend yield right now of 2.37% and a payout ratio of 58%, which is very solid. And of course, 64 years of growing dividends is just amazing. That's a dream for every investor. But not just that. Also, their stock price is just rising since here 35 years on this chart, and even more, to right now to $135. For me, it's just the problem. Right now, they are overvalued and way overvalued. My calculated intrinsic value is around $80, and so it's not a buy for me right now, but it's very high on my watch list, because this business is just great and I would be happy to be owner of this business, but for a reasonable price. And as you maybe already know, I like to buy my shares way under the intrinsic value, but with a great business like Procter Gamble, I would be very happy to be able to buy in at the intrinsic value or around the intrinsic value. To be honest, I'm not sure if we will ever see prices around that, but I have to be patient and just stick to my plan, and hopefully I'm lucky enough in the next crash to get some shares around the intrinsic value. And also my second pick, Johnson & Johnson, great portfolio of brands, of well-known brands. I think almost all of these brands are known, and almost all of these brands you bought at one time or even constantly. So it's almost the same picture like with Procter & Gamble. When you look at the free cash flow, they also make money all the time, even in recessions and in very difficult times. And with that, they are able to pay a growing dividend for 57 straight years right now, and with a dividend yield of 2.75% right now, with a payout ratio of 51%. So also very solid numbers. And also Johnson & Johnson is just rising over the last 40 years to right now $148. But it's the same problem also like with Procter & Gamble. They are just overvalued. My intrinsic value is around $90, and therefore I have to be very patient and just hope I get the chance to buy in around the intrinsic value. And it's just the same like with Procter and Gamble. I'm just not so sure if these prices I will ever see. But however, it's on my watch list and I wait patiently and hopefully I'm lucky enough. If you are a proud owner of the shares of one of these companies, I would just say just hold it and never think about sell because these are great businesses. And then just take a look at my portfolio. And in the last week, I received my dividend from MasterCard of $2.72. Not very big, but at least something. And also, I received my dividend from American Express of $13.52. And even if both of these payments are not that big, it's just nice all the time to get some dividends and have some cash flow. And so that's great and that's good. So everything's fine with that. And then just take a look at my list of my positions in my portfolio. And as you can see, almost all of my positions are in the plus. And in the last few days, Chevron was very strong and just went over 50% of gains again. And also Ledger and Plaid and Facebook was very strong lately. So this is a very nice picture overall, and I'm very happy about that. But with that said, of course, I'm a long-term investor, and I know in the next crash or correction, these gains or a lot of these gains will be gone. But that's fine. I know that. I know this will coming. But that's not a big deal for me because all of these companies I have in my portfolio are very great businesses in the past, right now, and also in the foreseeing future. And I would say almost all of these companies, maybe also forever. When we will have a crash or correction, then maybe it's time to buy into new companies like Procter and Gamble and Johnson and Johnson before, or even just buy more of these wonderful businesses I have already in my portfolio. And if you want to learn why I bought into all of these companies, just look at my watch list. I made a video of every single stock and describe why I think it's a great business and what my reasons to buy into them and hopefully never have to sell again. So enjoy that. And of course, give me your opinion about every stock in my portfolio or also on Procter and Gamble and Johnson today, and let us discuss. And then also take a look at the diagram of the proportion of my portfolio, and you can see that my cash position rises. It's just because all my savings go into this account, and right now I have over 17% of cash. And this is also a good feeling because right now a lot of stocks and the market overall looks overvalued, and at some point we will have the next correction or the next crash. Nobody can predict when this will happen, but for sure it will happen. And so it's good to have some cash there and just buy more of these wonderful stocks or even new wonderful businesses into my portfolio. So I feel like I'm in a very good position right now. And then last but not least, look at the overall performance of my portfolio. I started this North American portfolio at the 2nd of December 2019. And since then, the performance is over 25%, which is very nice. And what's even nicer is that the outperformance to the S&P 500 rises again to around 17% right now. And this is very good and very nice. And I'm very happy about that, even more because my portfolio is not so heavy on tech stocks and not so heavy on some hype sectors like the electric vehicle sector or something. A lot of these companies I have in my portfolio are the old economy, the kind of boring businesses, very stable and solid businesses. With that, you just can see that It's not necessary to take the risk of very hype sectors. You just have to buy into solid, great businesses, and the rest time will do for you. That's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel, and let us reach together the 200 subscriber mark. We are very close to that. And ring the notification bell to never miss another video. And then we will see you the next time, then with another analysis of another stock out of my portfolio. And see you then. Take care. Bye bye.